All right, what is up, tycoons? Super excited for today's video. We're looking at AMD, and we are getting a nice little bounce in my demand zone here, and a nice bounce off of the trend line. Okay, we're looking at the daily chart right now, and we have this triangle pattern forming here. All right, we have this green box. This is what's known as a demand zone. Okay, and essentially, this is an area where every time we touch it or every time we dip into this, there's a demand imbalance, which is this is an open market, right? So it's all supply and demand. So there's a demand imbalance, and sometimes these are called support levels, right? What I like to do a lot of the times is make a demand zone, right? Because support level a lot of time tends to be one specific price level, right? Like $100 even is a support level, and you'll see it bounce around there. But in my opinion, supply and demand zones work really well. This is a supply zone we have up here. All right. This is going to be our supply zone here. And this is where we can see a potential sell-off, right? We've been facing resistance in these areas. We did have some breakouts, but then we fell right back into it. Okay. So, right here in between 125 and about 118 is going to be our supply zone, where there's currently a supply imbalance, and we need to create more demand than supply in these areas. And then down here from about 100, let's just call it 101 to about 96 is our demand zone. Okay. So why am I showing you guys this? Well, there's a good option swing trade that you can get into with a pretty nice stop loss. Okay. You can set a stop loss at 99.5. All right. That's going to be basically this level right here. All right. And I'll draw this up for you here. We'll put it nice in red, and we'll call it our stop loss. Okay. And so, this right here is going to be, you can either, set an actual stop loss order, or you can do what I do a lot of times and like to use a mental stop loss, because market makers, one of the biggest games they like to do is they like to trigger people's stop losses. All right. And then recover. Right. So I know that we have a demand zone here all the way down to 96. So, if we touch 99.5, I want to be alerted to exit my position possibly and reevaluate. But, I don't want to exit right away, because, what if it comes down here to past 99.5 and then it bounces really hard at 98 and goes back up. All right. That's something that you all need to be aware of, and just kind of figure out your own strategy, right? Are you very active? Do you have the time to reevaluate something when a stop loss alert goes off? Or do you need to just set an actual stop loss and then set a profit goal, right? So essentially what we're looking for on this move is we're trying to catch it off of this trend line here that we've bounced twice on. One, two. Now today we just had our third bounce here. All right. And we're trying to catch this move up to this blue box. All right. So that's about a 17.5% gain on shares. And, you can get into shares and, you have a nice stop loss here. Okay. If you got in around 100, then, your stop losses, you're going to be risking, 50 cents, right? Down 50 cents. If it goes to 99.50 and you got in at 100, but if you get in right now, currently it's about you'd be risking about $6 a share. And then to gain up to 117, 118 level, that would be risking $6 a share to gain about 13 dollars a share, right? So that's about what we call a 1-to-2 ratio, right? Where for every $600 you're risking, you potentially can make up to $1,300 in reward, right? So you at least want to have a 1-to-2 ratio, preferably a 1-to-3, 1-to-4, 1-to-5 ratio, right? And I'm going to show you guys how we do that every day in the Options Trading Tycoons Discord. So if you want to join that Discord, the link to join is going to be in the description below, and use code Zachly, like the channel name ZachlyTrades, and you'll get a discount. What we're doing is we're essentially playing this move right here, this box. This is what's known as a daily gap. All right. And if you zoom in just a little bit more, all right, you guys can look here and you can see there's a gap in between this candle and this candle. All right. Now I like to chart these up and pay close attention to these, because these historically in the stock market fill 90 to 95% of the time. So what you can do is you can go to AMD, right? And we'll click AMD and we'll pull up the option chain for AMD. Now you can do this on Robinhood, Webull, whatever platform you're using. And let's look at some of the May contract expirations, right? These have 29 days till expiration, so about 30 days. And if you go here and you do what's called a vertical debit spread, right? So you would click buy, then hit vertical, and you're going to purchase the 115 strike and sell the 116 strike. All right. This is going to cost you anywhere from $25 to $35. All right. Let's just put it right here in the middle. And let's look at the play real quick. Okay. So for this play, for every $30, right, you have a max profit of $70. So that's over 100% profit potential in the play currently, right? Now, if you get a cheaper fill and you can come in at 25, right? Let's look here at 25. I should say 25 right here. All right, that one will cost you 25 and 75. So that's a 1-to-3 ratio. This is what I meant by, showing you guys what we do in the Options Trading Tycoons Discord. This is a 1-to-3 ratio. So now for every $25 or $2,500 you put into this, you can make $75 or $7,500. So it's much easier to take profit. As I showed you guys earlier, if you got in the play now or at 100, and you wrote it up to 118, that's about a 17.5% gain. Well, using this strategy, you can get, your max profit is going to be, around 200-300% on this, turn it 25 to 75 per contract you get. So, you can grab as many of these contracts as you want. The thing is you will only get your max profit if AMD is above $116 by the expiration date. Right now, in full transparency, most people do not hold, especially traders, through expiration date. Right, what you're doing is you're looking to set yourself up for a very nice play. And I know that if everything goes perfectly well, and AMD is above 116 on May 6th, I'll have $75 for every one of these contracts. Right, but as I said earlier, most people don't hold these till. So, if the max profit on the shares was only offering about 17-18%, you could easily set that as a profit goal, right? So you could buy $2,000 worth of these, or $200 worth of these, right, and sell at 20%, right? And I can say with a little bit of confidence that getting 20% on a play that has over 200% max profit, right, is going to be relatively easier and much easier, right? It's not necessarily easy, but it's going to be much easier than doing it alone on the shares, right? Now, the thing with options is that they're highly volatile assets. So, if AMD drops, you may see this thing go down 20, 30, 40, 50%, right? But let's think of it this way. Each share costs $100, $105 currently. One of these plays cost you $25. So think about your risk to reward ratio, right? If you're, earlier you're risking $105 to try to get it up to 118, right? For a $13 gain per share that you have for every $100, $105 you spend. Well, one thing you could do is you could, purchase, $100 worth of these contracts, right, to simulate and, replicate owning a one full share worth, right? But you look at this, it's much cheaper and you're going to make more money, right? So this is a really nice way to minimize risk, is using some debit spreads, buying and selling an option. And as I said, it's much cheaper, right? You're only risking $25 for these versus the whole 105. And you wouldn't be able to make $75 just owning one share. If you bought one share at 105 and sold it at 118, you would make $13. But if you buy one of these and you're able to sell it for a profit of $13, right? So let's say you buy it for $25 a contract, and then you're able to sell them for $40 a contract, right? You already made more than what you could have made if you were a perfect trader on the swing trade for the shares, right? If you were just swinging shares. So kind of think of it that way, right? It's it is a lot more risky trading options, but when you think about your risk to reward ratio, it makes a lot more sense to risk $25 for a max profit of $75 than to risk $105 for a max profit of $13, chasing the move to 118. So I really hope this video made some sense to you guys. I have a lot of tutorials on my channel. You can go ahead and click on some of them. I have a few up here right at the end, covering supply and demand and some RSI divergence, some things like that. Those are really good, helpful for beginners. And I suggest maybe starting with some of those. And let me know in the comments down below if you guys have any stocks, cryptos, anything like that you want me to analyze, give you some technical analysis on, or if you have a strategy or tutorial you would like me to explain for you.